Good afternoon, everyone. My name is Mitchell McCoy, and I'm once again joined by Ms. Rebecca Van Natten. We are both managers here at Curtis Blakely. And over the last few weeks, we've been issuing a lot of content in regards to the payroll protection program, but we wanted to transition into some of the tax credits that we had previously alluded to in our earlier videos. Rebecca, do you mind going into some of these tax credits for us?
Well, today we're going to be talking about the Employee Retention Credit, which is also referred to as ERC. It really is just another COVID relief opportunity that's designed for employers to be able to keep employees on the payroll during these times. So with ERC, eligible employers can receive refundable payroll tax credits for paying qualified wages and group health care plan costs. For 2020, the credit is reimbursed at a 50% rate, and there is a cap of $5,000 per employee for the 2020 calendar year. However, the program has been expanded for 2021. With 2021, there is now a 70% rate of return, and the cap is now $7,000 per employee per quarter. And currently the program is available through June, so employers can receive a maximum of the $7,000 per employee for both the first and second quarters.
It's a pretty significant tax credit opportunity.
Absolutely.
Okay. Rebecca, in general, I know we've discussed previously the eligibility guidelines for the payroll protection program. Are there different guidelines for the ERC?
Yes, so the ERC guidelines are completely different. And even though it is called Employee Retention Credit, you do not have to keep the same employees on, the payroll. Whereas PPP, they look at that as far as, did you keep up your payroll levels and did you keep up your wage levels? None of that is required with ERC. In general, there's just really two guidelines, and if you meet one of those two, then you can be eligible. So those two guidelines are if the employer either experienced at least a partial suspension of their operations, or if they had a significant decline in their gross receipts. And now you might notice I didn't say like a full suspension, but at least a partial. So anything that really just affects the operations, even if it is by government order, then it is eligible for ERC. And the government order doesn't have to be, a federal order. It could be a city or a county order, but it does have to be by order, not just simply a recommendation.
Okay. And Rebecca, we've had a few clients ask, they've allowed their employees to do some teleworking or working from home, and they've experienced some decline in efficiencies. Do you think that would in general fall under the partial shutdown guidelines?
In general, no. The IRS has issued some guidance saying that, employees that are able to telework, that is not a suspension in operations.
Okay. And then what about the gross receipts decline? What does the test look like for that?
Well, if you do not meet the government shutdown test, then the gross receipts test for 2020, you look at if you had a 50% decline or greater. For 2021, it is a 20% decline is considered the significant decline. And now the rules do get very tedious as far as what quarters you're looking at and things of that sort. So what we can do is we will include a link to the IRS website that explains what quarters to look at and how to do those calculations.
Okay, wonderful.
There's also some additional rules on there too for like large employers and new businesses that will be on that link.
Okay, wonderful. And we had previously done some videos in regards to the payroll protection program. And what we want to point out to clients and those that might be watching from home is that both the PPP program and the employee retention credit are available at the same time concurrently to your business if you meet the eligibility guidelines for each of those programs. I want to point out though, you're not allowed to use the same cost for either of these programs. So when you're applying for that PPP loan forgiveness, and you met the eligibility for the employee retention credit, you're not going to be able to use the same wages for each of those functions. So what we're recommending to clients is that be very diligent with your PPP loan forgiveness applications. If you remember back that you need to spend at least 60% of the loan funds on eligible payroll cost, which leaves the remaining 40% on other eligible costs that are on the application that we previously discussed. that way we can maximize both our PPP loan forgiveness and leave some wages on the table for potential employee retention credits. And that kind of feeds into the next very common question that we're receiving. How do we file for these credits? Well, as Rebecca said, originally, if you received a PPP loan back in 2020, you were not eligible to take the employee retention credit. That has subsequently been changed. So if you meet that 50% gross receipts failure or the partial or full government shutdown, you can go back and apply via your amending of the 941s or your quarterly payroll reports. If you're in 2021, you would typically file with just at the end of the first quarter when you file your 941, you would put those credits on there. And there is a 3-year look back period in which you can apply. So it's not absolutely crucial that if you're not sure if you met those gross receipts tests that you apply immediately. You can go back at a later date and amend those 941s, but we would recommend to our clients, as soon as you know you've met one of the 2 eligibility guidelines, to go ahead and file.
Yes.
There is a mechanism to receive the credits in advance, but that's a little more detailed, and we would recommend, consulting with your accountants or advisors in regards to how to do that.
And if there's any additional questions or if you would like any assistance, please feel free to contact any of us here at Curtis Blakely. We would be more than glad to help.
Thank you.